What's going on, guys? Welcome to the weekly technicals live session for October 28th, 2018. What's going on, Tom? How's it going, man? So we are going to get started and go over the technicals for the week. I'm going to start and go over the weekly time frames, and then we'll drop down and go over the daily time frames. And basically just the same as every week, we're just going to talk about what I'll be looking for, the levels I'll be outlining, potential entry opportunities, and where overall the objective I'll be targeting for the week. Really quickly before we get started, I want to just talk about the upcoming news releases for the week. So we do have NFP on Friday, I believe, or maybe I'm wrong. Yeah, so we do have NFP on Friday. So we do need to be cautious of that. More than likely, I won't be trading much Thursday and Friday. I'll probably have all my trading done between Monday and Wednesday. Maybe Thursday, but particularly Monday through Wednesday, because if you look, we do have a bank holiday for Euro on Thursday, as well as a ton of GBP news. So we'll probably have a very volatile GBP on Thursday. And ideally, I'd like to get my trade off before then, because I think we'll probably have some major volatility for this, or they'll just consolidate and then unleash for Friday during NFP. So ideally, I want to have all my trades completed by Wednesday. So mainly I'll be focused Monday, Tuesday, Wednesday, and then we start a new month on Thursday. So that's kind of factored into my analysis there, and ideally why I want to keep my trading between Monday through Wednesday this week. So with that being said, let's go ahead and talk about the dollar index now, and then we'll break down foreign currencies. For dollar index, we had our what was the level? Sorry. Let me check on the daily time frame really quickly. It was the 96.20 level. So 96.20 was these relatively equal highs here, and we were consolidating a bit down here. Just below the high, we came up, formed an equal high here, and then finally we exploded through it, came back down, just missed the retest here, but nonetheless it found support and started trading higher. And on Friday we seen a little bit of a rejection and a bearish close. Ultimately, I think the target for dollar index will still be the 97 big figure up here, where we have resting liquidity. So the people were selling this market on the way down, and their stop losses are resting above here, so the market will look to expand up towards that and clear out any liquidity resting above the market. Now if we get back below this 50% level here, so that's this ICT bullish order block, so we have this down candle before the push up, which led to the move above these equal highs here. If we get below this 50% level, which comes in at 95.80, then basically I'm gonna have to potentially switch my bias to bearish, and this would be a potential lower high, and we'll look for the market to seek lower liquidity. But as it stands, I am still bullish dollar index, and my target as of right now is 97 big figure. And from there, if we go back out to a weekly perspective, we have resting liquidity above the 97.80 level here, which is a weekly high, and then we have a weekly ICT bearish order block here that comes in at the 98.50 level. So those are going to be my longer term targets. Again, we have 97.80 and 98.50. So make sure to have those levels on your charts. But first things first, we have to get above the 97 big figure, and from there I'll look for continued expansion to these levels up here. So again, on the daily perspective, make sure you have this level here, 95.80. That's going to be basically the lowest I would like to see dollar index go before a push higher. But they could easily just come down and retest these equal highs here, which come in at around that 96.20 level, only about 10 pips below us from where we're at now, current market price. And if we retest that, we could easily find support and continue trading higher for the 97 big figure. So that is it for dollar index. Let's go on to euro dollar now. And looking at euro dollar, very similar scenario here. You can see that we have resting liquidity below this low, which comes in at 1.13 big figure. And so far we're finding support within that 50% level of this down candle, which is an ICT bullish order block on a daily basis. So the market formed this down candle before pushing up. Now we've come all the way back down into that, found a little bit of support at the 50% level and seen a bullish close on Friday. But nonetheless, I still think that we'll get continued expansion to the downside with an overall target of 1.13 big figure. So that's about 98 pips to 100 pips of where we're at right now for current market price. And from there, if we go out to a weekly perspective, we have, so the 1.13 big figure, we have the weekly ICT bullish order block here, really small down candle, as well as the resting liquidity below this low. And if you look, we actually have another low here on a weekly basis, which comes all the way, the number comes in at 111, let me actually click this line, 111.20. So that's a significant amount of pips from where this low is. That's about 200 pips away. That'll be my longer term objective, and then 1.100 big figure if we get a continued expansion from there. But as of right now, I'm really only looking at 1.13 big figure for the week on Eurodollar. And if we go back out to a daily, I do not want to see this market get back above the 50% level of this up candle, which is an ICT bearish order block. So if we actually take our fib and we draw out the fib from the open to the close, you can see that our 50% level comes in at 1482. For the purpose of making it easier, I'm going to use 1.1480, just round to the nearest even number. Okay, and I'm also going to change it like that. And so if we get back above 1.1480, at that point I will be switching my bias potentially to an underlying bullish stance on Eurodollar. But as of right now, as long as we remain below 1.1480, I believe we'll continue trading lower with our first objective as that 1.13 big figure. And now let's move on to GBPUSD. So looking at the British pound, this one here, you can see we have just peaked our head below these relative equal lows here. We haven't seen a significant bearish candle close beneath them, so we've just come down, wicked below it. And a lot of retail traders are going to be anticipating that this market has bottomed out and they'll be looking for higher prices. And that could be the case, but as of right now, I'm still sticking with a bearish stance on this pair because I am remaining bullish on dollar index, so that in itself means weaker foreign currency. And looking at GBPUSD, we do have these this level here, which is this daily level, also an ICT breaker. So the low of this, it's basically just a market structure break, and we'd be looking for a retest. So you can see that we retested it here on Thursday. But I'm expecting or anticipating a potential retracement back up into the 1.2920. So this can have a further retracement than Eurodollar. And 1.2920, we should see some level of resistance. At most, we could see it possibly trade back up into this daily ICT bearish order block, which comes in, the low of this candle is 1.2936. Also basically lines up perfectly with the previous level that we had on our chart, which was the 50% level of here, which we had previously come down, found support, and traded higher from. Now we're below that, so old support now becomes potential resistance, and as you can see, we also have a perfect ICT bearish order block low lining up with that level, so spot on. We should definitely see some resistance come in. If we don't find it at 1.2920, we shouldn't see it trade too much higher than 1.2935. We could see it potentially dip into the open of this candle, maybe 1.2950, but ultimately I would expect some level of resistance to come in here, and from there we could see another round of selling, big bearish candles again like this, like we've been seeing on the down move. I'll be looking for that to continue trading below these equal lows, and if we can get some further expansion from there, I'll be looking for the liquidity that's below this low back here, which the low of this candle comes in at 1.2660. So that'll be my longer term target. I'm not going to have the level on my chart yet just because we are quite a few hundred pips away. But as of right now, I'm looking for potential retracement back up into here or here. And I would be looking for lower lows and lower highs to be forming off of that level on a 15-minute or even a 5-minute time frame, whichever shows the price action the clearest at the current time the market's up here. And once we get that confirmation, so we'll see the lower low, a low, then we'll see it trade up, make a lower high, trade back below, make a lower low. That there is confirming that we've got resistance within this market. Look for a potential retracement. You can use your fibs on this move or wait for the market to trade up into potential ICT bearish order block that be formed within this level on a lower time frame, such as maybe a 15-minute. And from there you would look for continuation lower with an expansion below these equal lows. So again, that 1.28 big figure is the level we'll be looking for. So again, we've traded through it a bit with a wick, but I'm looking for a bigger bearish candle to trade through that. And if we can get some expansion from there, I'll be looking for the liquidity below this low at 1.2660. Maybe even expansion down to 1.2650. So that'll be my objectives for GBPUSD. Ideally, again, I'm looking to be taking any trades Monday, Tuesday, Wednesday this week. Not really looking to be trading too much Thursday and Friday going into a new month or with NFP. So I think if we're going to be bearish these foreign currencies such as Eurodollar and GBPUSD, we should see them continue expanding lower Monday and Tuesday. And if they are going to have a retracement, we could get that, we could actually get that Monday and Tuesday as well, but I would like to see them continue expanding lower initially, and then maybe retrace at the end of the week. That would be typical. Or we could retrace early in the week, so we could see GBPUSD trade up Monday, Tuesday into 29.20, and then sell off Wednesday, Thursday, Friday with the news as extra added volatility to take this market lower. So that's what I'll be looking for with GBPUSD, and I'm going to briefly go over Euro Pound really quickly. We had this low outlined at the 88.50 level. We finally got above that level, so that was a previous low where we had found some support, and we were anticipating potential resistance there. Once we traded into it, we showed a few days worth of sticking below it, so we were showing potential resistance, but we finally broke through it here on Thursday. Friday again continuing higher. So I think Euro Pound will continue higher, so if anything we should see further weakness on GBPUSD. So I will be focused more on selling GBPUSD than selling Euro USD. But I just have to wait for those key daily levels to be traded to before I actually act on any specific trades. So again, for Euro Pound, we're either going to continue to remain in this consolidation that we've been in for a while now, or we're going to continue trading higher from here. And if you notice, we've got an old high here, so we've got liquidity resting above here. People that sold this market, they have their stop losses resting above here. So I would expect some level of resistance to happen within this up candle, because we did have a nice little sell-off from here, and we do still have some liquidity resting below the market down here. So what we can do is we'll mark out the 50% level of this candle just in case, because that'll basically be, if we get above the 50% level, at that point we'll just have to assume that they're going to continue trading higher, and we can expect that this could be a longer term low in place, and we could see higher prices on Euro Pound. So this level comes in at 89.25, and that's the 50% level again of this daily ICT bearish order block. So if this market is going to trade lower, the absolute highest I would want to see it go would be here. If we get and close above that on a daily basis, anticipate a potential run higher for the liquidity above this high, maybe a continuation above here and this high as well. So once we close above here, you can anticipate a retracement, either retesting this level or some level of ICT bullish order block down here. And from there you'll see or expect further continuation higher, running liquidity here here, and here. So let me just put my X's here so we know that we're going to be expecting a potential run higher, and we know that the liquidity is resting above the highs here. Now again, just for clarity purposes, I do not trade this pair. I just use it for directional analysis. So I look at EURGBP and I determine whether I want to be a seller of Euro or a buyer of Euro, and also a seller of GBP or a buyer of GBP. And I determine that by looking at the Euro USD, the GBPUSD, and the US dollar index. So that is it for Euro GBP. Let's talk about USDJPY for a bit now. And last week in the weekly technicals video, we were mentioning this ICT bearish breaker here, and I said that I wanted to see it either get above the 50% level, and if we could do that, we'd be looking for higher prices. So that was 112.80 to about 113 big figure. You can see that this candle here actually ended up closing at 112.81. The bodies of the candles traded 1 pip above 112.80. And from there we seen resistance come in the next day and we sold off. So nice respect of this ICT bearish breaker. I did not take any trades on this. I was looking for a further continuation higher with my higher dollar index or bullish dollar index expectations. So I was looking for a higher USDJPY, and there was no trade in here for me, so I didn't take anything on it. Nonetheless, we did see a nice profitable trade on Euro USD last week. As you can see though, on Friday we did come down, finally spiked back down into this daily ICT bullish order block here, found a little bit of support at the 50% level, and ultimately closed a bit higher here. So this could be a significant low in place for dollar yen, and we could see higher prices. But ultimately I need to see it get back above this ICT bearish breaker, which would I need to see it really get above 113.20. If we get back above 113.20, I'll be looking for higher prices and a potential run on this 1.1450 high here. But up until then, I think we could just consolidate in here for dollar yen. So I won't be trading this pair unless there's something else that presents itself in the chart. But as of right now, there's nothing that I want to act on with this pair, and really nothing else for me to talk about with it. Alright, let's move on to Australian dollar now. And so last week we were anticipating lower prices with our bullish dollar expectations, and with that we did see a lower low form here on Australian dollar, traded below these lows here. Nice resistance was shown coming off of this down candle before this up move. Also an ICT bearish breaker, or a break of structure and a retest. And so Friday you could see we came all the way down, formed this wick, and ultimately closed higher with a bullish candle. So personally, I don't necessarily have a clear read on this pair, just being honest. It does potentially look like we could see it trade back above this high. I don't want to see that though. I would like to see them continue trading lower. Let me actually go out to a weekly to see if we can get a little bit more clarity here. Okay, so if you look at the weekly chart, it's very clear that we've been talking about these moves that we've had. This bullish move, sell off, made a lower low, traded back into the weekly order block, and last week we seen a sell off forming another lower low. So when you look at the weekly chart, it's much clearer. It does look like it wants to continue trading lower. So my expectations for this week of Australian dollar will be looking for a run on last week's low, which was 1.7021. So let's use 1.7020, and that'll be the low that we'll mark out here. So let me just do that. And that'll basically be the next level we'll be expecting this market to trade down into, which is about 70 or so pips from current market price. So that'll be my expectations on Australian dollar for the week. And honestly, we should just see this pair continue selling off. There's really nothing up here that I want to see the market trade back up into. we should honestly just see it continue selling off and trading lower. So just anticipate lower prices with Australian dollar. Now, if we get back above these highs here, I'm honestly not going to be looking for anything to trade in this pair. I may have to either move to either a bullish bias or just accept the fact that it could consolidate in here for a bit. So overall, I would like to see them trade lower, but if we do trade back above this high, which the high comes in at 71.59, so you can use 71.60. If we get back above that, then ultimately, I would anticipate either consolidation or higher prices. But personally, I would just move to the sidelines and not look for any trades in this pair until something else clearer presented itself in the charts. All right, so let's go over New Zealand dollar. And similar scenario with this pair here. Let's go out to a weekly first. So you can see on the weekly chart, we've been having bullish weeks, selling off, making a lower low. Then we trade back up, form a lower high, sell off, trade back up, lower high, sell off. So if you look, we've been having 2 bullish weeks, 2 bearish weeks, 2 bullish weeks, 2 bearish weeks, 2 bullish weeks. So looking at this, I'm expecting again another bearish week. Personally, I would like to see them get below this low here. So the low comes in at 64.24. And in terms of the better selling opportunity, I personally would be favoring New Zealand dollar. It looks clearer to me, in my opinion. But we can look at Australian New Zealand dollar as well to see which would be the better selling opportunity, just for clarity's sake. But I think New Zealand dollar, we should see weaker prices, especially after having this nice bearish close last week. But let's go back out to a daily time frame. You can see on Friday we had again a nice sell-off, making a lower low in reference to this low here. We've still got this old low back here, but this is ultimately the level where we've got resting liquidity and we want to see the market trade below. So again, just like Australian dollar, I don't really want to see this pair trade higher. There's nothing really up above the market for them to come up and grab. They've already ran any liquidity above these highs with this move up and then sold off and made a lower low. So for me, I just want to see them continue expanding lower. Again, with my 64.20 objective for the week, which is about 100 pips or so from current market price. I would remove some profit once you get below this low, which the low of this candle comes in at 64.65, and that's roughly about 50 pips away from current market price. So once you get below here, secure some profit and keep a small portion on for the run on 64.20. But ultimately, I'm looking for weaker prices with New Zealand dollar, and again, we should just start selling off from right now. Market's already open, so we should just see continued expansion to the downside. More than likely, we'll see them start selling or see some selling come into play during Asia session, which is starting in about just under 2 hours or so. And so typically this pair likes to move a bit during Asia. So if I have some time, I'll take a look at the charts and see if we can spot anything in this that I'll want to sell. I don't want to just sell right here where we're at now. I mean, you can if you want and just place your stop loss above this high, which comes in at 65.45. But personally, I'm not going to sell this right now until I actually get some proof in the charts. So basically, we're on a 15-minute chart now, and I just want to see some sort of a lower low form and confirm that we found resistance. As of right now, we're just consolidating. So this is a high, this is a low, this is a lower high. Now I need to see a lower low, another lower high, and I can look to sell that as a potential selling opportunity. But as of right now, there's nothing I want to take with this pair. And finally, let's move. Oh, actually, before we move to dollar CAD, let's go over Australian dollar, New Zealand dollar. So hopefully you guys are kind of noticing a change in pace a little bit. I'm trying to keep these weekly technicals not as long because I know they're typically like an hour, and I go into some rants, and sometimes they're beneficial, but sometimes they're not really so beneficial. So, for this week, there's not really too much that I want to talk about other than just the few, most of the majors. And, really after that, if you guys have any questions, I'll open it up for Q&A, and you guys can ask any questions that you may have. But really quickly, before we go over dollar CAD, let's talk about Australian dollar, New Zealand dollar, and really just get a clearer picture for what would be the better selling opportunity. Would it be Australian USD, so AUDUSD, or would it be the Kiwi, New Zealand dollar versus US dollar? And if you look at AUD NZD, we've traded lower here, had a nice little sell-off, running the liquidity below these markets, below these lows, and we've started to push higher. And if you look at the bodies of the candle on Friday, we actually closed back above the body of these down candles. So this to me looks like we're going to start trading higher. We could have a longer term low in place here for Australian dollar against the New Zealand dollar. And if you look right here, we've got relative equal highs above the market. So basically what all this means is I'm expecting Australian dollar, New Zealand dollar to start trading higher, which simply means stronger Aussie over the New Zealand dollar. So if you think about what our expectations are for dollar index, we're expecting bullish dollar, which means weaker foreign currency. So out of AUDUSD and NZDUSD, based on our analysis here with Australia and New Zealand, what would be the better sell opportunity? New Zealand dollar, right? Because New Zealand dollar is going to be weaker if Australian New Zealand is pushing higher. So we've got liquidity above the market. We've already came down and taken the liquidity below the market. So now we should see this pair trade higher, which would cause weakness for NZD, and with a bullish dollar index outlook, we should see NZDUSD have a better sell-off than Australian dollar. And then, as you guys just seen in the charts, on the weekly basis, we have a much better selling opportunity, or in my opinion we do, based on, look at what's unfolding technically. High, low, lower high, lower low, lower high, 2 weeks of bearishness, 2 weeks of bearishness, 2 weeks of bearishness. Potentially one more week of bearishness, taking out the low here at 64.20, giving us about 100 pip setup here. And this is a pair we don't really trade. So I'm going to keep my eye on this one for this week. It does look like it could be a nice trade. And again, that's how you can look at the exotics, so Australia and New Zealand, and decipher which would be the better trade. Would it be AUD-USD or NZD-USD? So you do have to look at the dollar index as well, but using those exotic pairs can be beneficial, especially if you are trading the majors, which is primarily what I do. So now let's look at dollar CAD, and dollar CAD, again, longer term, like most of the other pairs, we are in a consolidation here, but as you can see, we are breaking higher, right? We've got low, high, low, higher low, higher high, higher low, higher high, and I'm basically expecting continued expansion higher of dollar CAD to run this high here. So this high comes in at 32.26, and so we can use 32.25, and that's a nice little ways away from where we're at now. It's about 140 to 150 pips or so. And we could definitely start seeing this pair break higher, because if you look on Friday, we had a higher high form. We've came all the way down Wednesday and we formed this low. So that was forming a higher low, respecting the bullish market structure. And I think dollar CAD will just continue expanding higher. So we could see a big week for dollar CAD this week. So keep your eyes on this one. Again, expect expansion up to the 32.25. This is again one of those pairs where I'm not really looking for much weakness. I don't want to see it trade much lower. I just want to see it continue trading higher. And as long as we get above Friday's high, which comes in at 31.59, Really 3160, you can use that level. If we get above that, just expect a run on this high here, again, which comes in at 3225. So let me just go ahead and mark out Friday's high so I have that on my charts. But if you guys have any questions, you can go ahead and post those in the chat box really quickly while I'm finishing marking out this level. And I'll be sure to answer any questions you have. But other than that, that is it for the technicals portion of this video. Let me just finish marking out this. So the high is 3160. Perfect. So once we get above there, just to kind of give you guys an example, once we get above there, you can look for a retracement back down into either this bullish order block here, or if there's another one that forms, or just simply retest the high, break of structure and a retest, and look for a continuation above this high at 3225. So that is pretty much everything I will be looking at for this week, guys. That concludes this week's weekly technicals video. I am going to stop the recording now and answer any questions that you guys have inside the premium group.